Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about JP Chase, who is announcing earnings this Friday, January 12th. Now, this should be an interesting one because JP Chase is the largest financial institution in the United States, and they also have a very, very large consumer lending portfolio, as well as a very large consumer deposit base, as well as a very large commercial deposit base. So there are a lot of small businesses that bank with JP Chase. There are a lot of individuals who bank with JP Chase. As such, they should be able to provide a very strong bellwether of the U.S. consumer. One of the things that I would note, however, is over the past year, this stock has brought in a 26.3% return, non-inclusive of those dividends that you see in here. In particular, they had a very strong Q4. So the question is, what do we expect here in 2024? What are they going to be pointing to? And what could happen with this stock? Because having another 26% year would be very surprising to me. If I go back 3 years, you can see that the vast majority of that growth was in 2023, despite the fact that early on in the year, we did see bank failures associated with First Republic, of which JP Chase was able to acquire quite a substantial portion of those deposits, as well as the loan base, and they could use that to better bolster their total assets. So what does that mean on a go-forward basis? If I come down below and we just overall talk about the company that is JP Chase, they continue to have a very strong history of dividends. If I showcase some of the historical dividends, you can see that they are paying around $4.05 per year, which is up from where it was 3 to 5 years ago, around $3.30, $3.60. I am expecting them to raise the dividend once again in 2024. Admittedly, I would be surprised if they announced it this Friday that was going to be their increase. But you can once again see that they have historically done a number of increases, and I don't expect that to change this calendar year. If you compare that to some of their peers, I would note that they're kind of right in the middle. If anything, I would say that the annual dividend yield is a little bit lower now due to the fact that they had a very, very strong Q4 in terms of the increasing stock price. So what are we expecting from JP Morgan this Friday? What can we expect them to do? Down below, you can see for our expected earnings. And when I say down below, I would note that I am using Charles Schwab as my broker. So if you want to see this information, you can leverage their platform as well. What I would note is here in the expected earnings, the consensus estimate is at 343. The past 4 earnings have all been beaten quite materially. So I would expect Q3 to be a little bit more representative of their actual earnings, be around that $4 a share range, maybe north of that. One of the caveats to that on why this could be lower in the future or for where we're at today is because the increasing interest rates is going to negatively impact the deposit base in terms of increasing the interest that they are having to pay to keep those deposits at the institution, as opposed to a similar level of increase that we would expect to see for the actual interest income on the loans that they have on their books. If you come down below and we look at those financial statements, you can actually see when we're looking at the income statements. If we tie this out, I'm actually going to make this a little bit larger for us to be able to follow along. But if we look at this on a quarterly basis, on the income statement side, you can actually see that from Q3 2022 last year, we can even call out Q4, that they have had a very strong increase to, in particular, the interest income side. Now, what I would note is that this is primarily because over that same time period, interest rates have increased by a very large amount. However, when interest rates are increasing, individuals and companies generally aren't going to be refinancing as much. They're not going to be going out and getting new loans at those higher rates. However, institutions generally, if you look at this total interest expense, institutions generally are going to see quite a material increase, in this case about 100% more or more than 100% of Q3 2022, as they begin to, or as borrowers begin to say, or depositors are asking, hey, for us to keep our money here, we need to see higher rates, which for those of you watching this video, I would recommend if you don't have your free cash in a high yield savings account, that would be my recommendation. Discover currently offers like a 4.35. So there is a lot of motivation to take advantage of those higher yield interest rates or higher yield accounts. So because of this, we could continue to see downward pressure on the net interest income, which you can see here in the Q3 timeframe. And again, this has continued to increase. They've managed those costs well. They've been increasing their revenue. So I'm not worried about them being not profitable. It's just, will this decline? Now, if this continues to increase because they continue to manage both sides very well, the only thing that could cause some downward pressure on this would be that loan loss provision, should they expect to see additional losses on a go-forward basis, which could happen in 2024. I think that we could see kind of a flat year from an economic perspective, but all of that could change if we were to see the inflation begin to impact or pick up again, which, due to some of the concerns around the Middle East and shipping lanes, I definitely think we could see that occur. So therefore, what? My opinions on JP Morgan stock, again, I really like the banking stocks. I think there's a lot of value here. But when you look at the charts where they're at here, when you recognize that they're at all-time highs right now, or they are close to where all-time highs have been, there is a strong capability or the strong argument to leverage the dividend to highlight their very well-run institution. However, they're at all-time highs, and I just think that you can probably do better with other investments, because again, even if you're keeping it in a high yield savings, I think that you're going to have a better return on this, although that's not financial advice. What I may look to do is sell some cash secured puts, because I would be willing to buy JP Morgan at a lower price. I just don't think this, unless they smash earnings and say that things are going to be really, really awesome, I don't see how the stock is going to explode higher from here compared to where it was, or compared to what we just saw over the last quarter. However, I do expect Jamie Dimon, their CEO, to come out and take a very cautious tone over 2024, recognizing that there is going to be a lot of moving parts in terms of global tensions, in terms of a local election being national election, and a number of other factors. I think they're going to continue to be cautious, and they always have an awesome slide deck to showcase what they're seeing within their portfolio. So let me know in your comment section down below your thoughts on JP Morgan and banking stocks, as well as please let me know what you're looking to invest in. If you made it this far, thanks for watching. Please subscribe and like the video, and talk to you soon.